We go back to the 2017 Bitcoin bull market high. That was when the futures were approved, right? They basically debuted. So there was a lot of hype that took us up into that news. And then what happened? That was the high of the cycle. If we go to the first high in 2021, that was the IPO of Coinbase that debuted, and that marked that high. We had a correction to 30,000. We then go to the second high later in 2021, and that was the ETF for the futures, Bitcoin. And so if you just look at that kind of consistency, that these big news stories that create so much hype create the top on Bitcoin.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. Gareth Soloway will tell us what is going on with Bitcoin and why it is affected by big news events. Bitcoin has a pattern of reaching new highs when something new happens, like the futures launch in 2017, the Coinbase IPO in 2021, and the futures ETF in 2021. These events create a lot of excitement and demand, but also mark the end of the rally. He will show us how to spot these tops and trade the crypto market. You don't want to miss this. So get ready as we jump into the conversation with Gareth Soloway.
We go back to the 2017 Bitcoin bull market high. That was when the futures were approved, right? They basically debuted. So there was a lot of hype that took us up into that news. And then what happened? That was the high of the cycle. If we go to the first high in 2021, that was the IPO of Coinbase that debuted, and that marked that high. We had a correction to 30,000. We then go to the second high later in 2021, and that was the ETF for the futures, Bitcoin, right? And that marked that high as well. And so if you just look at that kind of consistency, that these big news stories that create so much hype create the top on Bitcoin, it makes sense why that would be the key level there, or why it would sell off on the news. Now, you can talk about GBTC, obviously selling Bitcoin. There was a lot of smart money that bought ahead of this news. GBTC was trading at a big discount, so it was kind of an extra bonus to them as well. And they're basically just at the point of taking profits. They know the run-up is now in play. They know that the general consensus of retail investors will be to take a little bit off the table. And that just creates this back testing, this move back to the downside. Now, just in terms of the 48 to 50,000 level, what's fascinating here is if we do a Fibonacci retrace, right? So we take the high of 69,000, the low to the absolute low of this bear market here, which was around 15,000 and change. Notice that the 618 Fibonacci trend line here, that's exactly the high there. And lastly, I'm just showing you how I kind of arrived at that 48 to 50,000 level. If we take the 2019 high, connect it through the lows of the bull market right here, we actually get that same level. And so when I get confluence of levels, that's really where I start to say, okay, this is going to be a major level of resistance. And sure enough, it was. What's going on here is, and you're right about the fees, right? The GBTC is a much higher fee. So there's going to be a certain amount of money that is going to sell the GBTC and then eventually rotate into these other ETFs that have much, much lower fees. And I also think there was just, really, if you looked at how could you participate in your investment account at various brokers where you buy stocks, the only game in town was GBTC at the time, right? That's really all there was. It was either that or you go to the futures market or you go to Bitcoin itself on the spot market. So there was a lot of money that chased Bitcoin in, knowing that it would run up into the ETF approval. And it's just natural that you get this letdown where people say, okay, let me take some off the table here. Let me take my profits after such a mammoth run. So it's a combination of the two. You have the selling because of the fee factor and also just profit taking in general, which again, you can go to any asset class and you see these crazy runs. There's going to be a certain amount of profit taking that takes place. I do think that within probably the next couple of weeks, it will balance out. My bigger fear though, and this is the one bearish case that I have for Bitcoin, is that what happens if we get a market top in the S&P? What happens if we get a de-risking event in the overall markets, in the equity markets? And that then could also stall money from flowing into these new ETFs if people start to get scared. So right now, we know new all-time highs almost daily on the S&P and the NASDAQ 100, and that's great. But why is Bitcoin stalling out here? Okay, it's the GBTC selling of Bitcoin. That gives us that reasoning. But what again if we start to see the market sell off? And the one thing I'd like to point out to viewers here, which I think think is really important is that if you look at the past cycles on Bitcoin, so Bitcoin's topped out in December of 2017. The S&P topped out 6 weeks later in early 2018. If you go to 2021, the $69,000 high, the high was put in November. It was right at the end of December, 6 weeks later, that the S&P topped out. So I'm a little bit on alert here to say, okay, let's watch now 3 weeks. We're basically 3 weeks into since the spot ETF was approved. What happens over the next 3+ weeks? Do we see a stock market top, and do we see a correction there? And that would be another reason why you could argue that Bitcoin still has some downside to go.
Gareth Soloway explains his analysis of Bitcoin's price movement and his trading strategy. He is concerned about Bitcoin's lack of movement in the last few days, as it could indicate a bearish continuation pattern. When the price falls and then goes sideways, it means the buyers are being outnumbered by the sellers, and eventually the buyers will run out of steam. This creates a bear flag, which is a sign of a downward continuation. Gareth discusses that a bear flag is more reliable when it has more candles sideways, as it shows more consolidation and pressure. He avoids immature bear flags, which have only 2 or 3 candles sideways, as they have a low probability of success. He waits for mature bear flags, which have 5 or more candles sideways, as they have a higher probability of breaking down. Gareth says the fact that Bitcoin is not bouncing back up shows that the sellers are still in control, and that the ETFs that are buying Bitcoin are not enough to push the price higher. He pays attention to the ETFs that are dumping Bitcoin on the market, like GBTC. He also notes that Bitcoin's major tops have been associated with big news events, like the futures launch in 2017, the Coinbase IPO in 2021, and the futures ETF in 2021. He says these events create hype and euphoria, but also mark the end of the bull run. Now we have another potential top with the spot ETF, which is an ETF that holds actual Bitcoins, not futures contracts. Gareth also observes that Bitcoin has led the stock market by 6 weeks in the previous cycles, meaning that when Bitcoin peaked, the stock market peaked 6 weeks later. He is watching this relationship, as it could imply that the stock market will also correct soon. We are now 3 weeks into the top, which means we have another 3 weeks before the market could roll over. This is assuming that Bitcoin does not resume its bull mode.
I think if we continue, if we just continue to grind higher in the S&P and the NASDAQ, eventually the risk on trade takes back over, absorbs all the GBTC selling pressure, and ultimately pushes Bitcoin back up. So it's really the one case where Bitcoin could sell off is only if we see an equity market top. Now, if we direct our attention to my charts here, I just want to show you guys this because to me, all the narrative is in the mainstream media is that the markets are just gangbusters. Everything's just going higher. If we look at this, this is all the sectors in the S&P 500. And if we look going back to 2020 or 2019, if you look at all the other sectors except technology, we've basically gone sideways. There hasn't been much net gain. But if you look at technology, this has been just a rocket ship to the upside. And that has carried the entire S&P, the entire NASDAQ, to new all-time highs. And I do think that puts it in perspective of asking, okay, is this really a broad-based rally, or is this somewhat of a fluke where technology is just controlling the markets? And this type of chart makes me a little bit cautious going into the next few weeks to months. The technician I've isolated, once we broke through 30 to 32, that's where that 48 to 50,000 target came in. And what we really know is that 30 to 32 level is right here on the charts. And we could see how it was the low of the mid portion of the bull market here. And when we came up to it under here, it was resistance, it rejected it, resistance, rejected, finally broke out. So in the near term, if it pulls back to 30 to 32, I'm a buyer at that level. Now, what I will say, and you ask me, well, what's the scenario where we get to 15,000? If you really saw a bad recession hit, and again, we know that there's so many negatives out there, but so far, to be honest, government spending is just insatiably filling those holes, right? We've seen the Fed, and this is an interesting stat, we've seen the Fed balance sheet drop by a whole $1.5 trillion from $9 trillion to about $7.5 trillion. The U.S. national debt in that same amount of time has gone up, $4 trillion. And so you have to understand is that the Fed has supposedly been tightening monetary policy, but instead the government has been spending at crazy breakneck speeds that has overcompensated. And that explains a lot of why the overall equity markets continue to push up. But at some point that breaks. And at some point, we will slip into a recession. At some point, the Fed can't avoid it. And that's where I do worry that Bitcoin could head back down. So if you see, to answer your question simply, if we saw a 50% drop in the stock market, I do think you'd see Bitcoin retesting that 15,000 level.
Gareth Soloway speculates that Bitcoin could recover if the stock market continues to rise, as the risk appetite would increase and the GBTC selling pressure would decrease. The only scenario where Bitcoin could sell off is if the stock market tops out and corrects. He shows a chart of the S&P 500 sectors and points out that technology has been the main driver of the market rally, while other sectors have been flat or sideways. He questions whether this is a broad-based rally or a fluke, and says he is cautious about the market outlook. He explains his technical analysis of Bitcoin and says he has a target of 48 to 50,000 based on the breakout of the 30 to 32 level, which was a previous low and resistance. He is a buyer at that level if Bitcoin pulls back. He discusses the macroeconomic factors that could affect Bitcoin and says he is worried about a possible recession that could trigger a sell-off. The government spending and the Fed's balance sheet have been supporting the market, but they are unsustainable and could eventually break. If the stock market drops 50%, he thinks Bitcoin could retest the 15,000 level. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Seller for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.